Good morning. This is Tom Alexander. It is Easter Sunday, April 17th. I hope you are all enjoying your Easter and long weekend. Couple of housekeeping matters. I'm doing a two-part day trading webinar series. The first part will be this Wednesday. There's information about this webinar in the report, but the bottom line is that it is going to be a webinar on day trading that is unique in that I'm going to show something that, regardless of what you presently use or lean on, is something that I think will add value to trading. If you're struggling and you don't have something that works, this is something that works. We're going to cut through a lot of the noise surrounding day trading and show very specific examples of the techniques that I'm going to show. Day trading is its own animal. There is nothing in the trading universe that has more absolutely ridiculous bad information than day trading. So I'm going to address some of those issues and present something that is actually quite simple. That, again, I think regardless of your level of experience, it is something that you will benefit from. You do have to register. The registration is in the report. Another thing, if you're watching this video and you have not subscribed to my channel, please do so. If you like the material, please like it. And if you want to be notified, hit the notification icon, the little bell, and you'll be notified when I post something new. Okay, so we're at a really important juncture in the indices. It's been very difficult trading for 2+ weeks because we V-bottomed on basically the middle of March, and then we screamed higher into the end of March. And since then, we've been in this choppy decline into the ranges, into that conviction range that began at the low on the 14th. Let me show my screen here. That would be helpful. Okay, now, so here are the four primary indices, and you can see they are all in the same relative position from a market condition perspective. And I think the takeaway here, there are a couple of things actually. Friday, we had the S&P, or Thursday. Friday, there was no trade. Thursday was a very low volume day, and we tested the upper extreme of a balance area in the S&P and the NDX, and then immediately cratered all day long into the close. And at the close, we closed at the extremes in the S&P and the NDX. Now, the Russell and the Dow held up fairly well. Now, they did close on their lows, as did the other two primary indices, but they closed comfortably above the March 13th low that has to come out if we're going to go lower by much or for long. So the bottom line for this week, and I put this in the report, you know, I can slice and dice this and give you a half a dozen if and or buts, but let's boil it down to something simple. If all four of the indices close below their respective March 12th, 13th low, depending on where they made that low, that's bearish, immediately bearish. If, on the other hand, all four of the indices close above Thursday's cash session highs, and I'm talking about cash session here, that's immediately bullish. That's the bottom line. I'm seeing a lot of guessing about the next, 400 points in the S&P up or down, and that's pointless. If it's going to go down 400 points, all the indices have to close below the March 12th, 13th low. If it's going to go up 400 points, it has the indices have to close above Thursday's high. That's irrefutable. It's something that is actually can be used to make a trade decision instead of the wild forecasting up and down by various gurus. So that's where we are. Now, we'll take a look at the technical picture here, which I think is also interesting. And when I say technical, I use pretty simple things. This is NYSE breadth. And let me find, that's not the chart I usually use. I think this is the chart. Okay. So the red, for those of you that may be new to this view, this is the 10-day moving average of NYSE advancing issues. The green is 5-day moving average of advancing issues. And this is breadth. This is the net NYSE advancing minus declining issues at the close of each day. I put in the report, I sort of highlighted, we had this waterfall decline back in the middle of January, and it carried about just under 7% in a matter of 3 days before we had a huge bungee jump. If we were to have a similar decline, and this is the critical level, I do think if we close below last week's lows in the indices, that will test the downside key reference areas in the respective indices. And in this particular instance, this is the SPX, basically the S&P 500. If we were to have a waterfall decline, which would be a rather dramatic 2-3 day decline, then you're looking in something in the neighborhood of what we saw in the middle of January. Now, we've had negative breadth, I think 6 out of the last 7 days. I put that in the report. And if we were to have hard selling 2 or 3 days next week, it's going to put all of this work in extreme levels from where even in bear trends, you're highly likely to get a very sharp bounce. Now, we could get a very sharp bounce immediately. And again, the key is price action. What does price have to do to confirm that, or to signal, to give a high probability signal that we're going a lot lower? Well, that is if all 4 of the indices close below their respective last week's lows. What is the signal that we could have a strong rally in progress? Well, if all 4 of the indices close above Thursday's session high, it's, you can make this complicated, but that's the bottom line, and that's pretty irrefutable. And this will reflect what price does. There's a correlation here, not a causation. So that's what we're dealing with. So guys, I hope you found this helpful. Again, I'm doing this webinar, day trading webinar, I think will be extremely useful. I'm trying to really cut down through the noise, all the nonsense that's out there, and show something that anyone can use immediately, regardless of your level of experience or your present level of profitability or not. I think this is something you'll find beneficial. So guys, enjoy the rest of your weekend. I'll speak to you soon.